All right, we're back. This one is a very delayed video of a reflection for week of August 19th. Let's just quickly run over the news we had. So I actually only streamed on Thursday and Friday. So we're just gonna go over those days. Thursday we had a lot of news. Well, actually both days we had a lot of news, a lot of high impact news. We had Fed Chair Powell's speech on Friday 23rd. That was an interesting day. And then Thursday from 8:30 a.m. all the way to 10 a.m. we had news. And Friday we also had like an all-day event. So definitely a lot of volatility, a lot of manipulation occurring in the markets. So let's start with Thursday. Thursday I started by looking at the daily chart, and I noticed that price clearly has respected the consequent encroachment of the daily volume imbalance right here, day before, and then the next day we basically opened at the same level and started trading. Well, at that point, since this is technically at the end of Thursday, I didn't see that as we were going into Thursday. I was thinking of daily buy side liquidity, this swing high being the target, but then only after looking at it, once it's already painted, I realized we had new week opening gap of that week. So Monday 19th has created this new week opening gap, and we also had the old July 22nd new week opening gap. And I'm just thinking about it, those are a higher probability draw on liquidity, especially two of them clustered, so a multitude of new week opening gaps rather than the singular buy side liquidity above. So, and just judging from the fact that we've been overextending on the premium since like August, beginning of August, and now we're sitting in relative premium, it was only so much better and sweeter of an idea to search for shorts on that day. As we can see, not only we had the new week opening gaps in the same direction, we had the relative equal lows on the hourly chart that also added confluence in favor of the draw and liquidity being below us in this direction. And in the case that that draw and liquidity is true, we would also prefer to see a manipulation move against that draw on liquidity as a matter to engineer sell side liquidity. So that's what we see here. Once midnight occurs, this is about midnight, we then see price trade higher and higher and higher. And during the early morning session, we run the hourly relative equal highs, and then we break down. That basically is our manipulation leg for the day, because it's going against the true drawn liquidity, and this sweep of buy side liquidity allows the smart money to establish their shorts essentially. Now with the established drawn liquidity being below here, we treat any run higher as a suspect rally, which this one is. 9:30 a.m. puts us above the 15-minute relative equal highs of 8:30 a.m. range. This one, this swing high, and this swing high, they make up a little tiny relative equal highs above the old relative equal highs. So basically, really just additional run against buy side liquidity. And then we break lower, below, engaging in sell side that is resting below the London session, and then also returning into the new day opening gap of August 22nd. Here at 9:50, 5 minutes after the high impact news release, price runs lower. It leaves intact the relative equal lows, and then again runs higher during the remainder of the news release. This is also a really good signature if you're short, because we already know the drawn liquidity is below us. The price is looking to see to trade towards the new day opening gap, towards the hourly relative equal lows, towards the new week opening gaps. And that manner of move just kind of like flirting with the level and then moving away, it only adds the likelihood that it is just doing that to play around with the market actors and just sort of trap them into thinking that this level truly is not going to be touched. Instead, it helps them engineer the sell side liquidity and build up the um, well, allow the liquidity build up on below the relative equal lows to then run into and um, well, offset their shorts, the smart money shorts. Here's on 1 minute chart. So I recall I was looking at the daily buy side liquidity to be the target on that day, and looking at this 1 minute chart, I remember I thought that all of this move lower was manipulation and this move higher was the beginning of the displacement, thus the beginning of the true move higher, as I thought this would be the target, the short term drawn liquidity, and then going further higher into premium. But again, the reason is behind me picking that drawn liquidity is that I overlooked the importance and the magnitude of um, the new weak opening gaps that we had below us, the multitude of these two below us, together with the hourly relative equal lows. If I knew that context, it would be quite more certain that I would be in line with understanding that this yellow gap, once it was traded below, is an inversion fair value gap, and it only sets the stage for price to then trade into and then get rejected lower towards the relative equal lows that we had engineered since 9:50 a.m. But regardless, this is a really good experience for backtesting and looking at the old price moves and seeing where um, perhaps what I haven't seen at the moment, and identifying these things and realizing that in future it might be very helpful for me to look for those things like the new week opening gaps and maybe not rush with the idea, or maybe forcing the idea that the market needs to go higher just because I thought that that's what needs to happen. But otherwise, this was a really nice day, regardless whether I was on the side or not. We see a price take out the relative equal highs. Specifically, this is good because at that point we already know that the relative equal lows is the drawn liquidity. Price has left these relative equal lows here too, this one and that one. Then it trades into this fair value gap, which is the inversion fair value gap. And then it gets sent lower into the relative equal lows and further into new day opening gap. And if we actually proceed looking further, it gets sent all the way down into the hourly relative equal lows and into the second new week opening gap. So the total offered opportunity of this range was about 200 handles, which is plenty. Now on to Friday. And remind you, that week I didn't do any trades. I just I didn't find any opportunities. I wasn't really convicted of anything 100% or even close to 80 or 90%. Therefore, I didn't take any actions. So with this, Friday brings around. Since Thursday has brought us all the way back into the daily bullish fair value gap, Friday also has a lot of high impact news drivers, and that brings around naturally a lot of fake rallies and a lot of volatility into the market. I didn't see anything on the daily chart as I write here. I'm trying to be frank with myself and not just assume that I would have understood it if I saw it then. So, however, on the hourly chart, we have this range down, and effectively that range down brought us back. Well, it filled that daily imbalance. Then we open on Friday, the new day opening gap from 4 p.m. closing until 6 p.m. opening. That creates our new day opening gap, and then ever since then, price had just uh, come back into the middle and into all the way into the top of the daily fair value gap. And this gradual climb never really gets engaged, and neither does the new day opening gap. Not only that, but this climb eventually gets us all the way into and above equilibrium of this down range. And it gets us also into this hourly bearish fair value gap, which is inside of premium, again, based on the based in the relation of that range down. That occurs at 10 a.m. when the Fed chair news driver comes out. Price runs aggressively in this hourly buy-side inefficiency, this SIBI, sell-side imbalance, buy-side inefficiency. Gets filled, overshot, and then it breaks lower and, well, basically closed indecisively. But by this point, think how price has revisited the premium of this previously bearish range. Plus, it had left the new day opening gap untouched. With all that gradual climb in price, it now has overextended into deep premium, and we can anticipate that it may potentially break lower in search of the sell side liquidity, which would be found inside of the new day opening gap and below this gradual um, range up. Of course, what we see right before the real move occurs is manipulation higher. That manipulation higher, once the news hit, we have an aggressive rally, and people seeing this, maybe they were long since sometime before the news release, maybe they were considering going long, but as soon as they see that, they are like a lot of actors in marketplace are likely to buy in on this rally because of fear of missing out. When they buy into it, they effectively sign away their trap, and eventually price starts going against them. But for example, for people that were long since here and then they see this aggressive pump higher, they might be moving their stop loss below some of these arbitrary lows. For example, these ones are relatively equal. This is basic foundational knowledge for all the retail traders. They would probably put it here because this resembles support. And that's exactly what happens once price pumps higher. It breaks down. But specifically, if we see how it breaks down, it even adds more information and more conviction behind this logic. So at 10 a.m., we have news release. Then we have this huge imbalance. Price trades higher, higher. We have the relative equal lows here and relative equal highs. Now, because we already are more, well, we're favoring the idea that price is eventually going to go lower towards the new day opening gap, towards the consequent encroachment of the daily imbalance. What we want to see ideally is price runs the relative equal highs first, then breaks down, and then it'd be a more of a higher probability for relative equal lows to be targeted. So precisely that's what happens here. If we look at the time between 10 a.m. and when the news drivers come out at 10, when the news driver come out at 10 and 10:30, which marks the end of the pre-market range for the hour, we will find two liquidity pools, as I said, relative equal lows and relative equal highs. Then, onto this, add the likely drawn liquidity. We have had, as I said, price return into relative premium on the hourly range, and we are currently inside of well, we are currently in extreme premium. That's one. Two, the gradual climb since new day opening gap has formed had left sell side below the range untouched. So there's ample sell side below the marketplace. And three, we have this strong rally higher come in, which leaves behind a 15-minute inefficiency, the blue one right here. Regardless if we think that price is going to come back into this inefficiency and fill it, or maybe come back and then rebound, we know that it's going to come into it because that's just natural for the imbalances. So if we put all these together, we get a picture where the retail traders who have likely bought long into this rally or moved their protective stops higher, they're now trapped. And the price has now a higher likelihood of finding its drawn liquidity below the market in these relative equal lows, in further relative equal lows, in the daily imbalance, and even in the new day opening gap. And last piece of the puzzle we see is this run against the relative equal highs, which is technically a run against the opposing liquidity. And that's when we have a displacement lower below a short-term low. We get a shift in market structure when this candle closes. We get a fair value gap when the green candle closes. We can sell right here, put the sell stop above the previous high, and we can target the relative equal lows here. We can target the relative equal lows further down, or we can hold for the new day opening gap. But of course, I'm aiming for lowest hanging fruit objectives, so therefore I'm recording them as such. So this was my review of the week of Monday 19th. There's the daily chart. I'm recording this as of August 28th. I'm going to be streaming tomorrow. It was a hectic week. Just kind of getting into the routine and with everything that follows that. Well, hopefully this was insightful, useful, and and actually the last couple of things I wanted to share was the takeaways. So going forward, I want to focus on the simplicity of my process. So just show up every day and learn. And you can only learn by doing and not by watching. That's a lot of times I fall into that mindset of, perhaps not feeling like I do enough. And the only way to break that down is to just get in and do it, regardless if you want to be doing well, regardless of the mindset, or regardless of the need to do it right. Like, you cannot be doing it right in the very beginning. You're probably going to be doing a lot of mistakes and errors, and that's just part of the journey. That's exactly what gives you the fuel to grow into the trader that you yet don't even know you're going to become. I also want to be revisiting previous weeks and just study the old price action, just to train my eyes to see the setups better just before they unfold. And last but not least is, even though I'm going to be trying to show up every day, I don't need to trade every day. There's going to be days when it's not so clear, it's going to be a little muddy, and I should not force my setups. I should not rush my decisions just because I feel like I'm not doing enough. Simply just sitting down, putting aside the time to read the price has more benefit than pressing buttons in hopes of learning something, or just because of fear of not learning enough, or fear of missing moves. That's my little wrap on the week that was previously. Again, I didn't take any trades last week, but yeah, regardless, it was really fun. So with that, I'm going to leave it, and I'll see you soon, probably Saturday or Sunday. I'll upload the review of this current week. With that, take care. Peace.